And today we're going to be taking a look at a demonstration problem that would be similar to your homework from Chapter 4. The problem is focused on the closing process and the post-closing trial balance, but it also incorporates some other steps of the accounting cycle, which I think are good to review. Down here at the bottom of the page, we see the 8 steps of the accounting cycle. Those some books say there's 10 steps, just depends on what you look at, but here are the steps that we've been practicing in this class. And the first 3 steps that are shaded here have already been completed as part of this problem. In other words, we've already analyzed transactions and journalized them and then posted them to the general ledger, and we've been given an unadjusted trial balance to take a look at here. So in your textbook or in your homework management application, you would get this information given to you. So our job here is to first of all, update the general ledger accounts with the balances that are provided via the unadjusted trial balance here. And I've already done that in the general ledger. You can see all of our accounts have the proper balances. If you're working a problem manually, the proper way to do this is to show the date, the balance forward. In the posting reference, you would have a check mark there, and then you'd enter the balance and the adjusted date. And this information was gotten from here. So the unadjusted trial balance in the cash account is a $1,500 debit, and you can see in our general ledger I've done that, and I've done it through all the accounts that have balances that were provided here on our unadjusted trial balance. So as part of the problem, we've already done this first step. Our next job is to journalize and post the adjusting entries. The adjusting entries are provided down here below, and we will be doing those, journalizing those next. Then we've got to post those adjusting entries into our general ledger, and then we've got to create an adjusted trial balance. We're going to then do financial statements from that adjusted trial balance, and then we'll get into the new stuff that's part of this chapter, which is to journalize the closing entries and to create a post-closing trial balance. So let's start with these 6 adjusting entries that need to be done, and we're going to journalize those on what has been given as page 44 of our journal. The date today is December 12th, so we'll just put December 31st at the end of the year. And so we'll put that date in here. And the first adjusting entry says that our supplies on hand at the end of the year are $400. And if we look at our supplies account in our general ledger, we see that it shows a $1,400 balance. And so our goal is to make this balance now $400. And that math is pretty simple. We need to adjust $1,000 of our supplies in order to get that balance to be $400. So in our journal, we would debit supplies expense for $1,000, and we would credit our supplies account for $1,000. And that'll take care of the very first journal, the adjusting entry that we have to do. The second adjusting entry is, they say insurance expired on December 31st is $200. Well, when they use the word expired, they mean that is the amount of the adjusting entry. If they had said the balance of the insurance account were some number, then we would have to do a math similar to what we did with supplies to figure out what the adjusting amount should be. But in this case, they give us the adjusting amount as $200. So back here in our journal, we're going to journalize insurance expense for the $200 and credit to reduce it prepaid insurance for the $200. And that should take care of our next adjusting entry. Just as a review, see in our journal here, when we're journalizing, I skip a line in between each journal entry, and each one has at least one debit and at least one credit, and our total debits equal our total credits, and our debits are on top, and our credits are below and indented to the right. So let's look at our third adjusting entry that needs to be done. And we have two depreciation entries here, one for our trucks, one for our buildings. And whenever you're given the depreciation, that's the amount of the adjustment that needs to be entered here. And so we're going to debit depreciation expense for trucks and credit accumulated depreciation for trucks for $1,500, and then we'll do a similar entry for the depreciation on the building and the depreciation expense on the building. So I'm going to go ahead and journalize both those at one time. The trucks is $1,500, the building is $5,000. So we'll get over here and do depreciation expense for trucks, and that was, I gotta go look already. That was for $1,500. And the credit that goes along with that is accumulated depreciation for trucks, and that's $1,500. And then we'll have a very similar adjustment for building depreciation for our building, and that was $5,000. And then accumulated depreciation accumulated depreciation for building, $5,000. That should take care of those next two adjusting entries. Our next adjusting entry is one that we've seen before. And by the way, all these adjusting entries were just review from Chapter 3. But this is when people earn wages and we're not going to pay them until the following accounting period. And so we have to do an adjusting entry that shows the expense that we've incurred and a liability to pay them in the future. And again, they give us the amount here, $1,750. So that adjusting journal entry will be wages expense for $1,750, I think, yeah, $1,750, and wages payable for $1,750. And then finally, our last adjustment that we have to do here is we've completed some work and we've sent bills to customers, but they have not paid us yet. So this is one of the adjusting entries where we debit accounts receivable and we credit fees earned, or our revenue account. In our case, I just want to check here that, yeah, wages expense and wages payable was the correct terms for the accounts that we needed, and for our last adjusting entry, our revenue account is called fees earned. So this adjusting entry will be accounts receivable and the amount that we are going to bill is $4,500. And we're going to record the revenue, fees earned, $4,500. All right, so those are all of our adjusting entries. They've been journalized. Anytime we complete journal entries, we have to post them into our general ledger. So I'm going to take each of these and transfer those into our general ledger. The accounts that have been impacted, then we will update the balances of those accounts. And so the posting process, as I review, is we start a line at a time. We get the date, the account number, the page of the journal that it came from, and the amount. This is a $1,000 debit to our supplies expense account. So in our general ledger, we will go find supplies expense down here somewhere. It's right here. We're going to put in the date, which is 12/31. And when you're doing adjusting and closing entries, we do use the item column, and we note that this is an adjusting entry. The posting reference is page 44 of our general journal, page 44, and it was a debit for $1,000. That makes our balance a debit of $1,000. And then we need the account number right here to be the posting reference back in our journal, and that is a 55 for account number 55, and we continue that process. We'll go down here to the supplies account and post a credit for $1,000. And just as a reminder, in this problem right here, it said as our first adjusting entry right here is that supplies on hand is $400. And so after this adjustment, we expect the balance of the account to be $400. So when we go into our general ledger and we find the supplies account, it's up under the assets up here. And on the 31st, we have an adjusting entry. It came from page 44 of our general journal, page 44, and it's a credit for $1,000. That does make our balance a debit of $400. And then we need that account number right there, 13. And back in our journal, we put 13 in the posting reference column. Now I'm going to pause this lecture now and continue to do this posting. You should continue on your own, but after a while the repetition is probably not worth our time to watch me do this. So I'm going to pause it for a second, go ahead and post all this stuff and update our general ledger accounts. I'll do a quick summary of what was done there, and then we'll resume the process onto the next step. Okay, I've now completed posting all of these adjusting entries into our general ledger. You can see I have posting references in the general journal in the posting reference column, which are the account numbers of the accounts in which we've posted this information. If we look in our general ledger and we look at the accounts that required adjustments, we see that accounts receivable had an adjusting entry and we have an updated balance. Supplies adjusting entry, we saw that one being done live, and there's the balance. Prepaid insurance, the account balance has been adjusted. Our accumulated depreciation account balance has been adjusted. Our accumulated depreciation on our trucks has been adjusted. We have a new entry into a liability account for wages payable, which has been entered as an adjusting entry. Our fees earned has been updated. Our wages expense has been updated. And then a few accounts who did not have balances before in the expense category still do now have balances for depreciation expense on our building and on our trucks. There's our supplies expense. Our insurance expense has been updated, and that takes care of it. So now we have new account balances in our general ledger in which the balances have been updated through the adjusting process. And so now what we have to do is create an adjusted trial balance, and I have a template set up here for this. All I've done is copy our accounts in order from our chart of accounts, and I'm just going to enter the new adjusted amounts if they've been adjusted in the debit or the credit column, and if they haven't been adjusted, then they'll be remaining the same. So let's make this a little bigger so we can see it. And now we're going to go, all I'm going to do is go to my general ledger and get the balance of each account. My cash still has a $1,500 debit balance, so we're just going to put that into here. And then my accounts receivable has a new updated balance, and it is $7,500 debit. While I'm here, we'll get the balance of the supplies account. It's a $400 debit, so $7,500 and $400. Then our supplies had been adjusted. The new balance in the supplies account, or I'm sorry, the prepaid insurance account is $3,300, and my buildings is still $50,000, so that didn't change. So we're going to go $3,300 on the prepaid insurance and $50,000 in buildings. And so prepaid insurance was $3,300, and my buildings is a different order, $50,000 down there. We're going to get our accumulated depreciation from our building, and we'll also get the trucks and its accumulated depreciation while we're there. So in our general ledger, the accumulated depreciation for our buildings is $30,000, our trucks are $25,000, and it's $6,500 on the depreciation there. So we're just going to enter that information, which is $30,000, whoops, yeah, and $25,000, and Now I can't remember. I think it was 6,500. Let's go. Yeah, 6,500 is our balance of our accumulated depreciation for our trucks. So we'll put that in right there. And so just a little side note here from Chapter 2, just as a review. Now I can get a book value. My building book value is $20,000. The original cost less the accumulated depreciation leaves $20,000 as our book value. And that will be the amount we carry forward on our balance sheet, which we'll be doing here in a little while. And our trucks have a book value of $18,500. Cost of this less the accumulated depreciation. So let's finish filling out our adjusted trial balance. Our accounts payable is down here. So accounts payable is $1,700 credit, and we have wages payable of $1,750 credit. So here we'll just add those, 1,700 and 1,750. And then we go on to our capital account, and this amount is our beginning capital. We're going to have to update that to what it should be, and that's what the closing process is all about. So we'll still enter here on this particular one our beginning capital balance, and that was $34,200, and our drawing is $5,000. We'll get that while we're here. So $34,200 credit and $5,000 debit. And now we need to go to our fees earned. It has been updated because we had an adjusting entry to that. So our fees earned is now $69,500. And so we'll put that here on our adjusted trial balance. And now we're going to go with our expense accounts. We'll get a couple of them here: wages expense and utilities expense. In our general ledger, there's wages expense. It's $36,750 and $5,000 there. So $36,750 and $5,000. And then we have our depreciation expense on our building. That was a new adjusting entry, and that amount was $5,000, and our trucks was $1,500. So we'll get those two and put them in there. And $1,500, and then our supplies expense, or the amount of the supplies that got used up in our adjusting entry there, and that was $1,000, and our insurance is $200. So we'll get those two entered, and $200. And then finally, our truck expense and miscellaneous expense. Those didn't get adjusted, so those are the same balances we had on our adjusted trial balance, but the general ledger shows that those are $500 and $1,000. So let's enter those amounts here, $500 and $1,000. Okay, now, as in every trial balance, we still have to foot the columns and make sure that our total debits equal our total credits. In this case, our debit column totals $143,650. So I'll put that down here, $143,650. And if we've done everything right, this will also be $143,650, and it is $143,650. And so the last step in any trial balance is to make sure your columns are balanced, and they are. So now we have all the figures that we need with the correct numbers to create financial statements. And so I have provided here, and you will also be provided when you work your homework problems, with some templates. You may have to fill in the account names, which I've already done here. You'll certainly have to fill in the headers. The name of our company is DK Golf Course Management. The first financial statement that we have to do is an income statement, and the date for an income statement is a period of time, and for this company it's for the year that's ended December 31st. And so we have all these balances appearing on our adjusted trial balance right here, and all we have to do is go grab the correct numbers, put them in the place, do a little math, and we'll have our financial statements. So we're going to start with the income statement. We need our revenue. $69,500 is our revenue, and so since we only have one revenue account, $69,500. Our totals go in the right-hand column. Subtotals go in the left-hand column to make things easy to do. So since there's only one revenue account, our total revenue, $69,500. Now we're just going to enter these different expense amounts here from our adjusted trial balance. And so right here is wages, $36,750, and utilities is $5,000. So 36 and 5,000, and the depreciation on our building was 5,000, and it was 1,500 here. These are just from memory now. Let's go back and check them. 5,000 and 1,500. Supplies is 1,000, and that's 200. And 200. And our truck expense, I believe, was 500, and our miscellaneous was 1,000. And again, I get those numbers from my adjusted trial balance. Now, I have a line here that says total expenses, so I need to add these up. And when I do, I get $50,950. That goes in the right-hand column. And then our net income is just our total revenue minus our total expenses. And I can do that with a little formula in Excel. Revenue minus expenses. And our net income is $18,550 for this particular company, for this particular accounting period. And that's all there is to an income statement. And everything I needed was on my adjusted trial balance. And I got all those numbers from right here. Now our next job is to do our statement of owner's equity. The purpose of the statement of owner's equity, just as a review, is to we have a beginning capital balance, so we're going to add to that the net income, which is right here provided for us, less withdrawals by the owner, and then we're going to have either an increase or decrease to capital. In our account, I already know it's going to be an increase, and then we're going to state an ending capital number, which does not match, by the way, our general ledger ending balance or account balance, and that's the purpose of the closing process, is to make that happen. So let's start here. Our adjusted trial balance shows that our capital account has a balance of $34,200. So our beginning balance is $34,200. We're going to add to that net income, which we just calculated right there. So we're going to put in $18,550. And our withdrawals, again on the adjusted trial balance, $5,000 is what the owner has withdrawn in this accounting period. And so we're going to put minus 5,000. Okay, and so an addition of 18,000 and a subtraction of 5,000 means a net increase of 13,550 to our capital account. And so our ending capital is our beginning balance plus our increase to capital. And if we add those two together, we'll get 47,750. And that's our ending capital balance. Again, everything we needed was on our adjusted trial balance. We actually used these two numbers here and net income, which we calculated in the income statement. Okay, so the last thing we have to do is our balance sheet. Okay, and I've already provided the template here. This is a classified balance sheet. We can see we have current assets, and in our case we have 4. And we're going to have a number with total current assets. And then we have our property, plant, and equipment, which includes 2 accounts, trucks and buildings, and they both have depreciation associated with them. And so we're going to do some calculations there that give us something called our book value, which we'll carry forward. And so let's just start by transferring these balances in the current assets, and we'll finish that out first. So we have cash, accounts receivable, supply. So I'm just going to take these balances from the adjusted trial balance, $1,500, $7,500, $400, and $3,300, and we're going to transfer them over here to our current assets section of our balance sheet. And if we add those up, it'll give us our total current assets, and that's $12,700. Notice that that total goes in the right-hand column. and these subtotals were in the left-hand column. Our trucks account has a balance of, I believe, let's look, our adjusted trial balance, trucks, $25,000 with depreciation of $6,500. So in our balance sheet, we do this, 25,000, 6,500 worth of accumulated depreciation. And so the book value of our trucks is the cost less the accumulated depreciation, which is 18,500. We do the same for building. Our building original cost was 30,000, I believe. Let's look. Building 50,000, and the depreciation was 30,000. So we put 50,000 here, not 30,000, less the accumulated depreciation. And our book value of our building is 20,000. 50,000 cost minus 30,000 depreciation is 20,000. Our total property, plant, and equipment, you add the book values together of the property, plant, and equipment assets. In our case, that would be 38,500. And so our total assets are our total current assets plus our total property, plant, and equipment. And so that's going to be equal to 12,700 plus 38,500, or 51,200. And when we're all said and done with this balance sheet, if the number right there is not the same number as that right there, then we have done something wrong. So now we're going to move on to the liabilities and owner's equity sections of the balance sheet. And so we have here two liabilities, accounts payable and wages payable. And so if we look at those balances from here, accounts payable is 1,700 and wages payable is 1,750. So we'll plug in those amounts. And if we add those two numbers together, we get our total liabilities. And that should be what, 3,450, I believe. Yes, 3,450. Our owner's equity ending balance from our statement of owner's equity is 47,750, and that's the number that goes here, 47,750. And if we add our total liabilities and our total owner's equity together, we should get the same number as we did with total assets, and that's equal to that plus that, and we get 51,200. We can see that that matches our assets, and the accounting equation, assets equals liabilities plus owner's equity, has been satisfied. And so that's how we do our financial statements as a quick review. And we're not quite done. Now we are going to go to the part of the problem that's the new information, which is the closing process and then the post-closing trial balance. So all the rest of the stuff that we've done to this point has been kind of review, but now let's look at the closing process. So if you looked at the lecture that's been recorded for the closing process, our job is to take the temporary accounts, which are all right here in our income statement, plus the owner's drawing account, and make those balances return to zero. So that's a two-step process. And the second part of the closing process is to make the balance of the capital account in our general ledger match this statement of owner's equity. So if we look at our general ledger account and we find our capital account, we can see that the capital account has a balance of $34,200. And we want it to be $47,750, and the closing process will help us get to that point. So let's go to the journal, and our first job is to journalize the closing entries. And I can see we've had a header here on our journal. We're now on page 45 for our closing entries. And so if we look at our adjusted trial balance, we're going to close these accounts out and make their balances zero. So if it has a current credit balance, we're going to have to debit the account. If it has a current debit balance, we're going to have to credit the account. And so in this two-step process, we first zero out these accounts, the revenue and expenses, and in the second step of the process, we zero out the drawing account. And in both cases, we use the capital account as to update the balance in the capital account. So, step one, zero these out. We're going to debit fees earned and credit these expense accounts for their current balances, and there are their current balances. So in my journal, I'm going to debit fees earned as my first entry. The date is the 31st, and we are going to debit fees earned, and we're going to debit it for the balance of the account. And I can get that one of two places: on my adjusted trial balance right there, or in my general ledger. Fees earned is down here, and right there, 69,500. And so 69,500 is the amount of our debit. And that's the only debit we have in this particular company for their closing process. The rest of these are to credit the expense accounts. Wages expense, utilities expense, the rest of our expense accounts are right here. Depreciation expense on our building and trucks, supplies and insurance. So let's do that. So those are our expense accounts in order, and all I have to do is go get the balances of those accounts. We can again get them either from the adjusted trial balance or from the general ledger. I use this because it's easy, and so we have 36,750, 5,000, 5,000 again, 1,500, 1,000, 200, 500, and 1,000, and I'm just going to copy those and paste them over to save a little bit of time over here. And they are all credits because they currently have debit balances, and so those are the amounts that go there. Now, just take a note here. If we add these up, our total expenses, we get 50,950. I know that because back here on my income statement, my total expenses were 50,950, and my total revenue is 69,500. And one of the rules of journalizing is that your total debits must equal your total credits. That's not the case here. So we need one more account here, and the account is Don Kraus Capital. And the amount here is the amount of net income, 18,550. So in here we're going to credit 18,550. So that's step one of the closing process. Zero out your revenue expense accounts and close net income to the capital account. Step two is to zero out our drawing account. Now our drawing account is right here. It has a debit balance of 5,000, which means we need to credit that account for 5,000. The debit that will go along with it is to our capital account, and it will reduce the balance of the capital account by $5,000. And so this journal entry is to debit Don Kraus Capital and credit Don Kraus Drawing. And the amount was $5,000 and $5,000. Okay, so those are the journal entries for our closing process. 2 steps. Now we have to take this information and post it into our general ledger. And again, I'll do a couple of these and then we'll pause the recording until I finish them out. because the posting process is just repetitious and tedious. So let's start here with this one. We're going to go to the fees earned account, and we're going to post a debit of $69,500. So in our general ledger, we're going to go here and find our fees earned, and it's right here. And so on 12/31, we're going to do a closing entry. And it came from our general journal, page 45, and it's a debit for $69,500, which makes the balance of the account 0. Now, the way you indicate a 0 balance is to draw a line. Excel doesn't do that very nicely, so I'm just going to put in zeros here, but normally you would draw a line in the normal balance column of the account. We need this number right here, 41, and back in our journal, we put a 41 to show that we have posted that. And then we can continue the posting process by zeroing out these. And I'm going to resume when we get to the capital account and show you how that gets updated, and we'll do this last process live. So I'm going to pause right now and go post these credits to these expense accounts. Okay, so here we have resumed, and I have posted all these expense entries into the general ledger. I have my posting references here in my general journal. If we go look at our general ledger, we can start with here. We see that wages expense has credit of the balance, and it has now a 0 balance. By the way, I've updated now my fees earned to show a line in the balance column here the way it should be. My 2 utilities expense, 0 balance. My building depreciation expense on my building, 0 balance. Depreciation expense trucks, etc., etc., etc. So all of my expense accounts show a 0 balance. And so I want to pick this up here with the last 3 entries that need to be made from our journal and posted, which is we have to update our capital account and our drawing accounts here. So the first entry here is we're going to credit our capital account, which will cause its balance to go up by the amount of net income. And so in our general ledger, we find our capital account here. We enter the date of 12/31. This is a closing entry. Oops. And this came from our general journal on page 45. And it is a credit. Again, just to review, it is a credit of $18,550. So over here in the credit column for the transactions, $18,550. And to update our balance, we have a credit and a credit. That means add. And so our new balance is going to be equal to the old balance plus net income. And so the balance in our account after this is now $52,750. And so we take our posting reference of 31, and back in our journal, we enter a 31. And that is the end of step 1. We zeroed out our revenue and expense accounts, and we've updated our capital account to reflect net income. So finally down here, our last entry is to debit the capital account, which is going to reduce its balance by the amount of the drawing entry here. And so back in our general ledger, we're going to go back and redo what we just did on the 12th. It's a closing entry, and it came from our general journal, page 45, and this time it's a debit of $5,000, which makes the balance of this account $52,750 minus $5,000. So that, whoops, minus 5,000 is $47,750. And so I just want to take a second here. Our goal was to get the balance of our capital account to equal our statement of owner's equity ending balance, $47,750, and we can see that we have done that. Okay. Now let's go back and finish this posting process. We need that 31, and back in our journal, we place a 31 here. And then the last one is to zero out the drawing account. So we find our drawing account, and we're going to credit it for $5,000. So our drawing account is right here on the 31st. This is a closing entry. and it came from our general journal on page 45, and we're going to credit $5,000. You can see this should be the $5,000 balance should be over here, actually not here, so let's correct that, and that'll make our balance 0. And again, we'll draw a line. I just copy this one and we'll paste it right here and move it, and so now we have a 0 balance in our drawing account. And then back here we need this number 32, and in our journal we post 32, and now we have completed the closing process. So this will take us then to the last step of what we need to do, and that is to do a post-closing trial balance. You'll notice I've provided a template here. I've already filled in the header and everything. And the only accounts that are left that have balances in them are assets, liabilities, and the owner's capital account. And we're just going to copy the balances from our general ledger into the right place here and do our post-closing trial balance. And so if we get up here to the top where we have accounts that still have balances, cash is $1,500, accounts receivable is $7,500, so let's put those in here, $1,500, $7,500, and then our supplies has a balance of $400 and $3,300 for that one, so let's put that in. And notice they're all debits because they are asset accounts. Our truck, from memory, $25,000. Our accumulated depreciation on our truck was $6,500. Our building was $50,000 with depreciation of $30,000. Our accounts payable was $1,700. Our salaries payable was $1,750. And then our capital account ending balance in our general ledger, and you can verify all those entries that I just made from memory, is $47,750. So that goes in the credit column, $47,750. And the last step is to then verify that your total assets or total debits equal your total credits. That side is equal to $87,700. And this side should be the same if we did everything right, and it is $87,700. And so post-closing trial balance is performed the same way every other trial balance is. Copy the accounts in order that have balances, copy the balances from the general ledger, total them at the bottom, and if your debits equal your credits, you're probably in good shape. So hope this was helpful. Let me know if you have any questions. Good luck in the future.